Hey there, Ryan Burrell here from Capital Plus Mortgage. I'm going to start putting out a weekly video that's going over all different kinds of things in the mortgage world, whether that's strategy or explanations of different things, stuff like that. So if you have anything that you'd like me to talk about, please leave a comment below. I also don't have a name for what I'm going to call this yet, so if you have an idea, please feel free to let me know. Today, I'm excited to talk to you about the three main differences between conventional loans and FHA loans. I get that question all the time from clients and from realtors. So I want to go over the three main differences with you today. Okay, so the first main difference between conventional loans and FHA loans are the requirements between the two. First of all, there's different requirements on credit scores. With FHA loans, you can go all the way down to a 580 credit score. Now, at a 580, it's going to be a lot more difficult to get the loan done. The reality is that the best loans for FHA start around a 620. So if you have a 580, it's best for you to work your way up towards a 620, but we can take a look at it, and in some circumstances, we can still get those loans through the process. With a conventional loan, on the other hand, the bare minimum credit score is going to be a 640, and even at a 640, you're probably going to be better off at FHA. There's also differences in down payment, but not what you might think. A lot of people have the misconception that with FHA you can put less down with conventional. That's not actually true if you're a first-time home buyer or buying in certain census tracts. With FHA, the minimum down payment is 3.5%. With conventional, the minimum down payment if you're a first-time home buyer is actually only 3% less than FHA. If you're not a first-time home buyer or buying in one of those census tracts, then the minimum down payment is 5%, not the 20% that most people think. Okay, major difference number two. The conventional loans are privately sponsored, whereas FHA loans are federally government sponsored. What does that mean? It doesn't mean that if you get an FHA loan that you're getting a loan from the government. That's not what's happening. It's a common misconception. If you get an FHA loan, the same people are lending you the money, or I say people, the same organizations are lending you the money as if you got a conventional loan. The difference is who sponsored the underwriting guidelines and who's actually insuring the loan. So when you get an FHA loan, you're required to have mortgage insurance. Everybody with an FHA loan has mortgage insurance. And that mortgage insurance is provided by the government. So if you don't pay, then the government goes and pays. I don't recommend you do that because it'll completely ruin your credit and you won't be able to buy another house, but that's what happens. In a conventional loan, if you put down less than 20%, and that's where that 20% number comes from, you have to pay mortgage insurance. Same as with FHA, but that mortgage insurance is paid to a mortgage insurance company, which is private, as opposed to paying it to the government. So with FHA loans, the government is controlling the guidelines so that they determine what they're willing to insure. Whereas with a conventional loan, the private companies that are providing the mortgage insurance are providing those guidelines. Okay, and now the third difference between FHA loans and conventional loans. That's the total costs and the strategy for the two. So there's times where an FHA loan might make more sense for you and where a conventional loan might make more sense. If you have a high credit score, your total costs on the loan are going to be much lower with conventional than they would be with FHA. FHA has upfront funding fees. Their mortgage insurance is going to be much higher if you have a high credit score for the same loan to value. So if you have a high credit score, it's better for us to look at a conventional loan most of the time. On the other hand, if you have a lower credit score, even a 640, which would work for conventional, a lot of the time FHA is better because the interest rate for conventional as well as the mortgage insurance rate with a lower credit score is going to be so much higher because it's not government subsidized. With FHA, everybody gets the same thing. With conventional, that's not the case. It's based all on your credit score and how much you're putting down in terms of mortgage insurance. So what you need to do if you're kind of going back and forth, maybe you have a 655 credit score or a 660 credit score and you're not sure which loan type is right for you, you need to call a mortgage advisor who can walk you through the process, not just take an order from you, but learn about you, learn about your goals, and what you're trying to achieve so that they can give you the best advice for your situation right now. Anyways, this was my Unnamed Mortgage Show. Thanks so much for watching. I hope it was helpful. If there's anything that I can do to help you here in the state of Florida, I'd be excited to work with you and help you buy a home. Just give me a call. You can find all of my contact info on my page, or just leave a comment below with how you want me to get in touch with you, and I'll do that. Thanks so much. I hope you have a great day.